session is going to be very insightful. The reality is simple. Tax reforms are reshaping how small businesses operate. And whether we like it or not, every shop owner, vendor, tailors, entrepreneurs would be affected. But here is the good news: knowledge is power, right? This webinar is designed to break it down in clear, practical terms so you understand what these changes mean, how to stay compliant, and most importantly, how to position your business to thrive despite the reforms. Like I said earlier, CBH, the business of, we are always here to help your business grow. We're always here to help you at every step at the way, every step in time of your business. We want to help you. We want to unfold you with different tools, operational tools, digital tools, advisory sessions, business clinics, and what have you to grow your business. By the end of this session, trust me, trust you, you wouldn't just know the law, you would know how to use it to your advantage. Let's dive in. And today with me on the call is our no other person than our partnering someone from our partnering business, that's Sterling Bank. Thank you, Sterling Bank, for always coming through for us at TBH. And today, we have a very good host, a very reformed expert in the tax space that will be speaking to us on what we are talking about, which is the tax reformation and how it implicates or how it affects the Nigerian MSMEs today. Nigerian MSMEs, which you fall in your business. Like I said, if you have friends, colleagues, family that are into business that are not on this call, please do well to send them the link to join us now, because it's going to be an informative session that they don't want to miss. Today, join me on this call and giving us these practical tips and how we can try would be no other person than Temple, Mr. Temple Ijikwe. I'm sorry if I did not pronounce the name well. And Mr. Temple is from Sterling and is a very known. Okay. Hello, Mr. Temple. Can you just identify? Let's see you. Let's see you. Hello, Temple.
Hi, Esther.
Can you just say
Yeah,
hello?
can you hear me?
Okay,
Yeah,
yeah. Good afternoon,
good
Temple. I'm
afternoon.
happy to have you here. So Temple is a seasoned banker. He's also Temple. Don't worry, there's a lot of things to to his name, and there's a lot of rewards and awards. Right? He's a seasoned tax specialist and currently leads tax operations of Sterling Bank. With over 6 years of experience, he has developed strong expertise in tax management, compliance, and process optimization within the financial service sector. Before joining Sterling Bank, Temple held key roles at Sterling Bank PLC and Arm Holdco, where he successfully delivered critical tax projects and achieved significant tax cost efficiencies. He is an associate member of the Institute of Chartered Accountants of Nigeria. So I told you that this person is no other, is the man for the job, is the man for this, is the man that will tell us and break it down into the simplest bits for us to understand how the tax information will help our business, how we can use leverage it to drive our business. Knowledge is power, remember. So it is okay if you don't know. Same as me, I am on this call to also learn as you are. I don't know a lot of things, but I want to learn. It's okay not to know, but it's a bigger problem if you don't know and you don't want to know. So that's why it's very important that you listen on this call today. Um, Good afternoon once again, Temple. You now have the floor now. Please go ahead and take us through the journey on how we can understand the tax reformation and how we can implement it and use it for our business growth. Thank you so much, Temple.
All right. Thank you, Esther, for the beautiful introduction. And good afternoon to our listeners in the house today. And you're welcome to this hearing on the tax reforms. And like you know, it's been the key word on the street out there, the tax reform. Like everyone wants to know what it's about, how it affects them as a business, and how it affects them as an individual. So, like Esther has rightly said, I will do my possible best to break these tax terms to the simplest form in which you can relate with. And so you can apply them to yourself as an individual and also as a business. So Esther, please kindly confirm that my presentation slides are up. And
Oh, yes, Temple. Yes, we
sure.
can see it's very clear. Thank you so much.
All right. So when we say Nigerian Tax Reform Act, what exactly are we referring to here? So it's been prior to 26th of June 2025, we've been hearing more bills and bills and bills, tax reform bills. But on the 26th of June this year, the president eventually signed some of those proposed bills into law. And when we hear the term Tax Reform Acts, we are referring to four separate laws. Any reform will usually result in maybe a policy, a regulation, or even a law. The current tax reform of 2025 resulted in four separate laws, which were jointly referred to, or which we jointly refer to as the Tax Reform Act. So in our discussion this afternoon, when we say Tax Reform Acts, we are referring to four separate pieces of legislation. So I'll be taking you through how these reforms actually affects you as an individual, as a business, and also the economy at large. So my overall purpose this afternoon is to inform you and let you know some of the things that we, or you as a business, need to pay attention to and see how it impacts you also as an individual. We'll also see how these reforms also impact the economy because these are elements of the Reform Act. And we'll talk about what these taxes actually mean to the government themselves and how they impact your business. So, as an individual, I think tax in itself is actually a skill that everyone out there should actually have, just like you have your personal finance, able to account for your personal funds, your income and expenses, or maybe even being able to drive a car. I think tax too, at the minimum, is something that everyone should have. How it impacts them and how it impacts the economy or the country at large. So the Nigerian tax landscape has actually entered a new tax phase. With the signing of the Tax Reform Acts of 2025, the whole idea is to make the system even more efficient and to streamline some of our taxes. Currently, we have the challenge of creating several taxes. The taxes are just too many. Prior to this time, we have about over 10 tax laws that are actually affecting individuals and also businesses. But this time around, the new tax reform is streamlining those tax laws into one. The laws were written in languages that were complicated and difficult to understand, and even difficult for the current commercial arrangement. Because of the evolving commercial arrangement, these laws were tough to understand and even interpret. And they were even incentives about businesses and how it even brings about incentives for businesses and even individuals. And not to talk of the challenges of multiplicity of taxes. So all of these were the issues revolving around the old tax law. So the whole essence of the new tax reform was to straighten things up, simplify our laws, and make things certain, as it were. So I'll be taking you through an overview of the Tax Reform Act. So like I earlier mentioned, the tax reform is actually produced four pieces of legislative acts, and they are the Nigerian Revenue Service Act, the Joint Revenue Board Act, the Nigerian Tax Administration Act, and the Nigerian Tax Act. So for the Nigerian Revenue Service Act, this is a law that repealed the Federal Inland Revenue Service Establishment Act, or like we know it today, for short, the FRS. The whole idea is to rename the FRS to now take on a new name as the Nigerian Revenue Service. But what is the reason for renaming the FRS? You might want to ask. The whole idea is to expand the mandate of the FRS. The FRS, as we currently have it today, seems to connote that the FRS has a mandate to the federal government alone, which is not the case. The FRS do not collect revenue for the federal government alone. It collects revenue for the federation. So for it to reflect the mandates of that, there was a need to rename it from the FRS to the NRS, or the Nigerian Revenue Service Act. So most of the laws are the same, like we had it, and what the current expansion to it would now cover that of the customs and duties. So the FRS now has the power to collect customs and duties amongst other mandates that have been assigned to it. So that is one of the laws that was actually signed by the president on the 26th of June. We also have the Joint Revenue Board Act. The whole purpose is to provide a method or an approach to govern the interests of taxpayers. The Joint Revenue Board Act actually brings a clearer rule around how you engage at the Tax Appeal Tribunal. And it also created an office of the tax ombuds. So prior to this time, it is not uncommon to have small businesses have a battle with the tax authorities as a result of issues around tax disputes and the likes. But of course, the Joint Revenue Board Act has been signed to have that engagement between the Tax Appeal Tribunal and also the onboarding of a tax ombuds or ombudsman that would assist small businesses to offset small tax claims. So if you are aggrieved, or if you are aggrieved in the way you've been assessed in terms of tax, whether as an individual or a small company, you can always approach the office of tax ombuds to resolve those small claims. The office of the tax ombuds will be across all regions of the federation, across all geopolitical zones in Nigeria. You can approach this office and make complaints around tax. So instead of going to the court, as it were, because really tax appeal in the court is really costly, is a costly endeavor for small business. And not a lot of small businesses have that financial capacity to offset such bills. So created a mechanism to resolve tax disputes between the tax authorities and taxpayers. So the Nigerian Tax Administration Act is also the third law that was signed, and this law actually seeks to provide a clearer framework on how you file your taxes. The penalty regime for not filing taxes has now become toughened, is now punitive, and where small businesses and also even large corporations actually have an infractions, the penalty is actually on the high side. So the Nigerian Tax Administration Act seeks to spell out those penalties so that individuals, businesses can also be aware and see how they can comply accordingly. So this now brings us to the fourth and final tax law that was signed into Tax Act that was signed into law, and that's the Nigerian Tax Act, or NTA 2025, as it's popularly called. This law will now govern all taxes that you are supposed to pay in the country. So before now, we have different tax laws from different tax types. So if you have a personal income tax matter, there was a Personal Income Tax Act for that. If you had a capital gain tax matter, there was a separate capital gains tax act for that. If you had a company income tax matter, there was a company income tax act for that. And the list goes on and on and on. But now those many and multiple laws have now been consolidated into one. This act actually took out all the sections that were irrelevant and we now have a single law, which is the Nigerian Tax Act. It covers the basis for tax, who to pay tax, the kind of income that are actually subject to tax, the kind of income that are exempt from tax. So by way of summary, the Nigerian Tax Act tells us who to pay, what kind of taxes you want to pay. And if you have the Nigerian Tax Act, you get to view all the taxes you have to pay at a go, as against what we currently have it by consulting serious and multiple laws that spells out these tax obligations. So this is just an overview of all the tax reform acts, and we want to see how they actually impact you as a business and how they impact you as an individual. So I'll be taking you through the key changes. What are the key changes that are embedded in these 4 acts that will affect you as a business? And how can you prepare yourself for the commencement dates of 1st January 2026? So the first key change I would want to go over is the category of businesses and how the new tax act, or the Nigerian Tax Act 2025, actually classifies small businesses. So the Nigerian Tax Act 2025, small businesses with gross turnover of 100 million and below, and fixed assets of 250 million and below are exempt from company income tax, are exempt from capital gains tax, and also are exempt from 4% development levy. So what's this saying in effect? If you have an annual turnover of 100 million or less, and you have a fixed asset of 250 million or less, you do not get to pay CIT, CGT, or 4% development levy. So there's a point I want you to take note of here. The law specifically spells out the clause and not or. So there are cases where, as a small business, you have a turnover of in turnover rocking 100 million or below, but of course your assets are way above 250 million. That does not categorize you as a small company, because you cannot fulfill one bit and then not fulfill the other. So you have to fulfill both parties. So you must have 100 million and below, and you must have 250 million and below to fall into the category of small companies. So what's the impact for SMEs in this case? So by way of this pronouncement in the law, it lowers the tax burden for small businesses. So it means that more cash stays in your business, maybe for reinvestment, maybe for payment of salaries, and even working capital. It also encourages growth. Small firms can scale up without immediately worrying about making taxes to the government or settling federal taxes at its way. And it reduces compliance pressure. To enjoy the relief, you must register properly, you must keep your books up to date, and for informal business, you need to formalize this to benefit from all of this. So the next point will now be a new 4% levy on accessible profits, which will now replace smaller levies. Smaller levies like the tertiary education tax, police trust fund levy, etc. But small companies, as we've defined above, are not required to pay this levy. So recall that we categorize small businesses as those who have 100 million and below in terms of annual turnover and 250 assets, 250 million naira assets and below. This also means that for large corporates, while they will be required to pay CIT, they will also be required to pay, as we currently have it, they will also be required to pay the tertiary education tax, the police trust funds, etc. But for small businesses, that is an exempt in itself. So it means that while you're exempt at the moment from the 4% development levy, which we will now have it from 1st January 2026, it means that there will be no confusion over the different levies you need to pay, because you'll be able to track your settlements what you're exempt from, and what you're liable to. It also means that small companies do not get to pay any 4% levy at all, which will bring in more cash for them. So while you don't pay CIT, you also don't get to pay development levy of 4%. But what is the requirement for small companies here? The government is looking at seeing how small companies can have a lot of funds to be able to scale up before they eventually get to that threshold of making payments in terms of CIT. But small companies need to monitor their turnover regularly to ensure that they have not crossed the small business category. Wherein they've crossed that category, they should prepare to begin to pay CIT. And of course, the 4% development levy will begin to apply. The next point worthy of note to small businesses in the economy today is the CGT rates. CGT rates for companies has risen. It has risen now from 10% to 30%. So it's now aligned with the standard corporate income tax rates. And then, but of course, small companies, as we've earlier classified them, are exempt from settlement of CGT. But what this means is that if you stay within the small company band, this change does not touch you, does not affect you. But once you grow above and beyond, selling your property or equipment or even shares can trigger a big tax hit before you know it. So while you continue to remain in the small company category, and then while you prepare to scale up, we also want to prepare to recognize the fact that we also have to be liable to CGT settlement when we grow above small company category. So it means that even our indirect offshore transfers are now taxable, and in practical effects, tiny businesses are safe, but scaling SMEs will need to think twice before selling their assets or restructuring, because the tax costs can triple as we have it in the new Tax Reform Act. So the next point I would also want you to know is VAT. There's been some sort of uncertainty and not so much of a clarity around VAT as it applies to small businesses. But of course, you might have heard that while these acts were in the bill stage, there were discussions around moving VAT upward, reviewing it upwards from 7.5% to 10%, and way up like that. But of course, the new tax acts have been signed by the president on 26th of June 2025 actually retained the VAT rate. So VAT rate stays at 7.5%. But it also introduced things like zero-rated goods. They expanded the scope of zero-rated goods, and also input VAT on services and CapEx are now fully claimable. So you might want to ask, what exactly are zero-rated goods? So zero-rated goods are businesses selling goods or services that do not charge VAT to customers, but can still claim the VAT input on the credits. So if you are in the business of, if you are in the category of business that are zero rated, and you have to sell your product or service to a consumer, you are not expected to include VAT in your invoice or in your charges to the customer. However, you might have incurred some costs in cost of bringing that your service or goods to the customer. The law is saying that for those kind of businesses, the input VAT or the VAT, which is classified as input VAT in that case, you can claim it, even though you have not included such VAT when selling your product or service to the final consumer. So that's really interesting, and it actually helps businesses to actually rake in some funds and continue to grow in the economy. So you can now claim VAT paid on services and capital expenditure like equipment you purchase, to run your business, you can now claim those impute VAT or VAT paid on those services. You can now claim them in course of running your business. So it means lower cost, better margin, and it encourages investments, since VAT on big purchases can now be recovered. And to enjoy these benefits, I'll continue to emphasize that you must have proper invoicing, proper receipts, and in fact, in total, proper record keeping. Without them, the tax regulators will refute your claims. So we want to also move on to what the law also brings forward in the new Tax Act, and that is better progressivity. And then smaller earners have increased exemptions. Higher earners get to pay more. So in general, the law actually makes the take-home pay for low-income earners even higher because they're exempt from tax. So it raises a tax-free threshold. It reduces the burden of tax on low-income earners. But of course, higher income earners would have to pay more. So since higher income earners can carry more tax burden, your business is not overburdened. If your payroll is mostly from low to middle income staff, it means that you are not overburdened with tax obligations in terms of settlement of personal income tax. It also reduces the administrative burden of having to file those taxes. And in short, small businesses get relief if they employ lower income workers, plus less compliance confusion on pay obligations. So this is just a high level summary or review of what exactly has changed and how it affects you as an individual, and how it affects you as the business. Yeah. So I'll be taking us now to discussions around VAT, and just to break it down clearly and in detail how it affects your business. So what's the VAT compliance obligation? Small companies are generally exempt from VAT registration and filing. So, and like we've earlier mentioned, the bandwidth for or the band for small companies is from 100 million and below, and 250 million in total assets and below, or fixed asset and below. So those category, if you fulfill that requirement, you will be categorized as a small business. That means if you fall under this category, you are not required to charge VAT on your sales or file monthly VAT return. But the law does not forbid voluntary VAT registration. So it also means that, how about companies who are already rocking or maybe close to the 100 million revenue and even have a threshold of fixed asset below 250? Should they stop charging VAT? Is it that the law is saying that their requirement is no longer valid and they should wait? Well, the law does not forbid continuing to file, but however, it states clearly that if you wish to opt out of the small company threshold and continue to charge VAT, you should write formally to the FRS or the NRS, as it were, stating your claim that you want to continue to charge, and you continue to render the returns accordingly. But it would be wrong if you continue to charge and then not to render the returns and have a claim that you are not a big company, you're still a small company. That would be wrong in its entirety. So I just wanted to clarify these bits so that small companies in this category can actually take a decision and also walk in line with what the law has advised. So the Act leans more on e-invoicing, especially around VAT, digital records. So small companies around the country or across the country should issue proper invoice. So you might have heard the term e-invoicing in recent times. and what it actually connotes, how it affects small businesses. So the invoicing in itself actually relates to a digital version of your normal invoice. So while you continue to render service to your customers, provide goods to them, issue them some sort of hard copy invoice or even an electronic invoice that is read via email. But the NRS or FRS is now introducing an e-invoicing initiative such that whatever invoice you send out to your customer, they're able to see it, not just to account for the VAT, but also for the economy at large. Remember, we talked about how the reforms affect both the economy. So for fiscalization, they need to know what you are doing as a business and how you are fulfilling your tax obligation as well. So if your supplies are zero rated, you don't need to charge VAT. We've emphasized that. And you must file properly so that you can claim your refunds. So even when you're exempt, you should complete your account and maintain proper invoice, because the tax regulators will pay you a visit on a regular basis to check if you are still within that threshold of small companies. And when you exceed that threshold and you did not declare same, the laws are now punitive in terms of penalty, and that will be adverse to your business. Penalties are heavier now. Even small defaults can attract huge sums, and they continue to accrue on a monthly basis. So as a business, as a small business, we want to take note of all of these points as it relates to the new tax reform. So we earlier talked about personal income tax, and want to see how they affect you as a business and also how they affect your employees or even you as an individual. So tax exemptions for minimum wage earners have been applied. Like we emphasize, lower tax for lower income earners, but of course it progresses higher as you continue to earn, and there's a graduated tax table for that. So it means that workers on minimum wage now pay zero tax. So by minimum wage, the emphasis here is on the national minimum wage and not the state level minimum wage. So lower income for staff who eventually receive less pay because they don't get to pay tax. So this reduces the pressure on you as an employer and increases the wages for your employees because they don't get to pay tax. So it helps these small businesses to manage, it helps you as a small business to manage your payroll costs even better. The deductions are simplified, they are no more complicated. Currently, we have a consolidated relief of 21% before we actually receive your, before you get to your taxable pay. But of course, the new tax act actually introduces a rent relief of 20% of annual rent paid, and is subject to a maximum of 500,000 naira of your rent, actually, whichever is lower. And the individual has to declare the actual rent paid by providing receipts for such payment. So what does this mean in effect? It means that as a business owner, you have employees who you make payments to. For those that are exempt from tax, they don't have to worry about this. But those that will be taxable, they will need to provide, for you to arrive at their taxable income, they'll need to provide you some sort of rent agreement or rent receipts, and this will be applied on their taxable income, or will be applied on their incentive or relief, such that it does not exceed 500%. So 500,000 naira rather. So if you have an employee who is paying a rent of say 1 million naira, you can only subject that rent amount to the maximum of 500,000 actually. For them to be able to arrive, for you to be able to arrive at their taxable income. So, like I earlier emphasized, the graduated table clearly explains it. So, for those who have earned 800,000 naira annual, this is on an annual basis, who earn 800,000 naira and below, they are not supposed to be taxed. Of course, if you do the maths, you'll see that 800,000 naira actually culminates into the minimum wage of what you have per month. But of course, it continues to graduate up until 50,000 naira or 50 million naira per annum. But of course, as a small business, we may not expect you at this time to begin to make such settlements to employees. So you may not need to bother about that band. But of course, the band that affects you, you need to take note of that so that you continue to apply same as you prepare your payroll costs and prepare settlements of salaries to your employees. Another point that is very key that you want to take note of is the mandatory individual returns. So business owners and even employees at that are now mandated to file their own returns. So even your returns or your personal income tax that has been deducted needs to be declared to the tax authorities. So this means that small business will now face more staff questions. They need to provide accurate payee records on time to avoid disputes. So if you have not been rendering returns of your employees to the state authorities, now is the time to prepare for that because come 1st of January 2026 is now mandatory for individuals to file their returns. And the deadline for that filing, as required by the law, is March 31st. That's 90 days after the end of the calendar year. So March 31st, all taxable persons are required to file their individual tax returns. So for business owners, you need to take note of this so that you can begin to make plans to render returns to the state authorities for your employees who fall under the taxable band. So that's the gist around personal income tax. So I would move on to other changes, and before I do that, I would like to maybe take questions from Esther if she has any. In the absence of that, I'll move on. So Esther.
Thank you so much, Temple. Thank you so much for that explicit session. I was taking from point 0 to point 100. So there are a lot of things I wasn't clear about, and you were able to break it down into tiny bits. I can now understand. In short, I can now take a training on tax information now from the knowledge I have gotten so far. I think so. I don't know if it's just me, but I think so. And I'm very sure that it's the same from every other person that has been listening on the conversation. But I have a couple of questions that I picked up that I know that you will furnish up with answers to better understand or better understanding. And my first question would be that so I know that small SMEs today assume that they don't need to bother with tax if they are under 100 million threshold you spoke about. So what risk do they face with that mindset? What happens? Because a lot of things are saying if you're doing business and you're below 100 million threshold, you are exempted from this, you're exempted from that. If I'm with that mindset to say, oh, okay, let me just go and rest and sleep, what risk do I face as a business person? What risk do every other business owner on this call, what risk do they face with that mindset?
Yeah, yeah. Okay, so that's a beautiful question. That's a good one. That so many small businesses assume that staying under the small business category or under 100 million naira turnover means that they can forget about tax. But they should recall that in reality, that exemption applies only to company income tax, CGT, and the 4% development levy. It does not cover VAT, especially for companies that are already filing such returns. It does not cover withholding tax obligations, or it does not cover your personal pay as you earn for your staff salaries. So ignoring these taxes entirely exposes your business to mounting penalties and even interest. And like we said, these penalties are now punitive. They are on the high side now. It can also cause reputational damage to your business. I mean, there are instances where you need to provide your tax clearance certificate, maybe to access a loan, a
Yes.
tender, or even a contract, even with the government. It means that you would not be able to have access to all those incentives. And still, it's also going to flag your business as non-compliant. I mean, it won't be palatable and nice to have customers come around your business and they see stickers on the walls of your business of non-compliance and that. So it does not take out the obligation of tax in its entirety. It only relates to income tax. And of course, transactional taxes, you still have an obligation around that.
Thank
Yeah,
you so
SI.
much, Temple.
Okay.
Thank you so much. So that answered my question so well. So the next question I will ask, and I'm very sure every other MSME on this call would also like to know, would be that um, can you break down how the new withholding tax exemption really works and what small businesses must do to qualify for it?
Yeah, so the withholding tax exemption, which I would also talk about in the bids, actually speaks to relief for small companies. It comes with a condition, and if a business, the regulation spells out clearly that if a company has a turnover below 25 million or transactions under 2 million, they're exempt from paying tax, provided both parties have a valid TIN. So to actually enjoy this relief, small businesses must register for tax, obtain and quote their TIN when they issue invoices to their customers for them to enjoy this relief. Without this groundwork, the exemption does not apply. And then tax authorities can still demand the withholding tax from these small companies. So in summary, SMEs compliance is less about exemption, is about the withholding tax exemption itself, but more discipline is required around record keeping and vendor management. Yeah, Esther, if you're speaking, I think you're on mute.
Oh, I will just signify that I've been muted. So sorry about that. So I was asking, right? I said that I mentioned that I would like to mix it. I've asked some of my questions, and I think that I want to also read some questions from the chat room. So this is also an opportunity to tell everyone that you can drop your questions in the Q&A box, and we would be glad to read it out to Temple to answer us. And I'm very sure that Temple is also going to be excited and glad and also delighted to answer every one of our questions. So I have two questions I'm going to read before Temple would continue with the presentation. So it says, what does it mean to claim input VAT? Okay, that's how the question goes. I don't know if you understood that question, Temple.
Yeah, yeah.
So it says,
Yeah,
what does it
so
mean to claim input? Yes.
Okay, yeah. So I did emphasize input VAT and output VAT. So for input VAT, I use an illustration. Let's say you are in the business of manufacturing and you manufacture sandals. And for you to actually make these sandals into the finished products, you need materials. And those materials are not gotten on the street. You don't pick them on the streets. You get to buy them from a vendor, a merchant, and then you get to transform them into a finished product. In cost of purchasing those raw materials, you are paid the price, and in most cases, that price includes cost of the material plus tax, and tax in this case is VAT, and that will give you your total charge. So the VAT charged on the purchase of that material is called input VAT. So you get to transform the raw material into a finished product. That's the sandal, and then you sell it. When you sell that sandal, that finished product, and in course of making that settlement, you include with the cost of the sandal a tax charge too, which is also VAT. That VAT is called output VAT. So it means that there's VAT at two ends. VAT for you when you're purchasing the material, that's input for you. Now there's also VAT when you were actually selling the finished product to the customer. So that's output VAT. So what the law actually brings to fore now is that you are now able to claim your input VAT. So the VAT you paid for purchasing that raw material, you can claim it back from um, tax authorities.
Thank you so much, Tempo, for doing justice to that question again. And before you would continue, I'm so sorry for the interruption. I just wanted to put in questions and while you present to ship in those questions, right? So someone also asks, how do we perform the NRSE invoicing?
Okay, so permit me to continue with the presentation because I'm going to talk about that as the first point.
Okay, yeah, that's fine. We'll just
Yeah.
listen on. Thank you so much, Tempo.
Yeah, so I'll be taking you through the other changes I'll be taking you through the other changes that I think will be necessary to know as a small business as we prepare for January 1st, 2026. And the first on the list is the invoicing and the electronic fiscal system. So I did speak about it briefly. And the invoicing is an initiative by the FRS backed by the Nigerian Tax Reform Act of 2025 to ensure that businesses are able to report their income and expense in an invoice format to the FRS. So I did say that prior to this time, when we issue invoices, is either via email or in physical copy. But what the invoicing initiative seek to bring on board to ensure that as you continue to issue those invoices without disruption to your business, the FRS wants to see. They want to see how you issue those invoices. They want to see the taxes you've charged on those um, charges you've made to your customers, and they want to see how you are able to settle your tax obligation as they become due. And if you're exempt, they want to also see. So this initiative is already ongoing. It's currently affecting they're currently onboarding large taxpayers, but it seeks to move to small scale businesses at the end of the day. But of course, for the large taxpayers, it's going to take effect from what's going to go live from 1st of November 2025. It was supposed to go live 1st of August, but it was moved forward to 1st of November 2025. But once the last taxpayers get on board, the next phase will be to onboard the small scale businesses or small businesses as it were. So there's a dedicated website for this initiative. I can encourage you to visit it. It also explains how small taxpayers and even large taxpayers can onboard, what they need to do, how they need to prepare themselves. So when you visit that website, you have the basic knowledge you need to prepare for this onboarding process, as this is the new initiative brought on by the federal government, championed by the FRS. So for VAT registered businesses, we want to take note of these points and then see how we can prepare for onboarding. Yeah. So the next point will now be jurisdiction of the Tax Appeal Tribunal. The Tax Appeal Tribunal is now the formal court for all disputes with FRS and the State Revenue Service or other tax agencies. For small business like you, it means that if you disagree with any tax assessment you've been served or penalty or even interpretation of the law, you don't have to go straight to the High Court, which is expensive. So the effect is that you get to assess, you have a clearer and faster route to challenge unfair tax bills. It's cheaper than full-blown litigations, of which you need to still prepare for proper documentation and formality. And small businesses need to take record keeping seriously to be able to defend their tax assessments and tax disputes they will have. This also brings on board what we had talked about earlier, and that's the Office of the Tax Ombuds. So the law also brings about the Tax Ombuds, which has oversight function on small businesses in particular. The Tax Ombuds protects SMEs by escalating unresolved tax issues to the National Assembly, where they've made earnest effort to resolve them. For small businesses, the opportunity here is that you'll be able to have protection. You will now have a voice, which often does not always require money at this time, or even lobbying to have your tax assessment settled. It doesn't erase the need for compliance in itself, but it gives small businesses more leverage against heavy-handed or negligent tax officers as we currently have them today. So small businesses are really at the mercy of tax authorities, but with the commencement of the new Tax Act or the Office of the Tax Ombuds, they will be protected and they will be able to carry on their business in peace while they continue to fulfill their tax obligation. So very, very important is also the need to file or the need to register for a tax identification number. Under the Nigerian Tax Administration Act of 2025, a valid tax identification number or TIN has become the entry ticket for small businesses to access contracts or even loans or other reliefs as it were. So without a TIN, you can't access government contracts or even bank loans. And it forces even the smallest operator to get on the radar of the FRS or state tax authorities. And since TIN are usually tied to invoicing, as we earlier discussed, a valid TIN is now your ID in the tax system. So for you to do anything as regards business in Nigeria today, you must have a tax identification number. So While you continue to run your business, as you prepare to onboard a new business, we advise that you think about registering the business for tax. You may not have tax obligation at the moment, but having a valid TIN also opens doors to reliefs and grants from the government. And of course, we don't expect your business to remain small in perpetuity. We expect your business to grow into a large business. And of course, when you start early, when you prepare yourself early, you'll be able to scale any hurdle that might come with transitioning from a small business into a large one. So there's also need to mention free trade zone. So there's the definition of free trade zones has been redefined. So for exports and free trade zone businesses, they enjoy full tax exemption. Full tax exemption only if they export 100% of their produce to, if they export 100% of their produce. Yeah. But of course, they face proportional taxation when they export above 75% to Nigerian custom territory. So it also means that while we have small businesses operating in the free trade zone territory, they also need to take note of these requirements. They need to keep full tax exemption. A business in this territory must not export all of its outputs, and even a quarter of that sales, if it goes into Nigeria, the exemption is gone. So export focus SMEs can still benefit, but they must ensure that they keep records to ensure that they are not exceeding the threshold. And the new rule discourages free trade zone arbitrage, that is pretending to export while you are selling locally. Genuine small traders need to have sharper accounting and trade logistics to be able to keep that relief. And of course, I think this is the point where the Business Hub can actually assist you. You would recall that in all of our conversations from the beginning until this time, we'll be talking about record keeping and the need to be tax compliant. The Business Hub can help you with keeping proper records of your business in terms of accounting, and also to ensure that you are up to date in terms of tax filing, as it were, or even other filings that relates to running the business, the economy. Yeah. So there was a question around withholding tax regulation, and at this point, I would like to address it with this slide. So this was actually a separate law that took effect 1st January 2025. And there's also a need to reemphasize it because as a small business, you have compliance obligations along this line. So for SMEs with an annual turnover of 25 million or less, and then transaction value below 2 million, with a valid TIN, would not suffer withholding tax obligation. So what's the effect on the small business? So it means that there will be increased cash flow. You get to be paid your invoice in full without getting to wait for long months to claim credits or refunds. So the way withholding tax works is that it's an advance payment of tax, which you get to use to offset your tax liability at the end of the year when you file your tax returns. But since you are a small company, you are not exempt from tax, there will be nothing to offset. So there will be no need to deduct withholding tax from your payments. But of course, it has to be within a threshold of transaction value of 25 million or less. Sorry, annual turnover of 25 million or less and transaction value below 2 million with a valid TIN. So there will be less paperwork and chasing of tax credits. There will be encouragement to formalize what you're doing. You get to enjoy exemptions if you have a valid TIN. And it nudges the informal operators to register. So with this relief, I'm sure it should spur small businesses to register and enjoy this relief. For across-the-counter transactions, which we term as cash and carry transactions, these are like quick goods or services without any formal contracts. They are not exempt from withholding tax. So prior to the formality of this law, there were um, uncertainties around if over-the-counter transactions should be tax deductible or not. But this particular regulation actually states it clear that they are exempt from withholding tax. So small businesses get to receive their payment immediately without deductions. It removes the stress of chasing withholding tax receipts or credits for small everyday sales. And of course, it encourages smoother cash flow. Also, like we had emphasized, we don't expect you to remain small in perpetuity. We expect you to grow. So it gets to a point where you begin to suffer withholding tax in your transactions and also get to file returns. So it means that when you suffer withholding tax on your invoices, the law has mandated that the business gets to receive an instant withholding tax receipt. So whoever had deducted your withholding tax, had deducted the withholding tax from your income, is required to furnish you with an instant receipt of such deduction, which you can use to claim a refund. So the moment that tax is deducted, the business gets it online. You don't have to be chasing your clients or chasing tax offices for months. You present that receipt given to you, and then you get to have a refund. So electronic filing or withholding tax must be filed and paid digitally, and this actually cuts the process of having to be swamped in manual paperwork. There's no need for physical follow-up at the FRS or the NRS, as it were. There's also the part where you get exemption. So there are revised rates. There are revised rates which the regulation actually brought on board. So prior to this time, we had the rate as high as 5%, 10%, but they've now been reduced to as low as 2%, just to ease the burden of small businesses to be able to carry on their business and have increased cash flow. So I also want to clear the air on what withholding tax regulation or what withholding tax actually represents. So many people have a misconception about withholding tax, and because of that, it affects their contract price. So withholding tax, like I earlier mentioned, is an advance payment of tax which you get to claim a relief at the end of the financial year to offset your tax liabilities. So the effect on small businesses is that they should stop customers from pushing withholding tax back on you as a cost, because these customers get to use this withholding tax later down the line. So if you carry on the burden of withholding tax, you get to bear the burden of this customer, which they will eventually use at the end of the financial year to their benefits. So it's an advance payment of tax. It's just that you don't get it back in cash at the moment. You get it back in future to offset tax liabilities. So it also can affect contract pricing such that where you have two customers who are selling the same products, because one of the customer seems to be clever and wants to avoid tax in its entirety, he gets to gross up his own price such that he includes the withholding tax in his price. But the other customer that understands what withholding tax is about gets to lay it bare to his customer. So it's also natural that the vendor with the lowest price would get the deal. So we want you to understand what withholding tax actually means and how you can incorporate it in course of doing business. And where there are gray areas around how you should treat these taxes, you can always reach out to tax expert, and of course, the business hub can help you with that. So, Esther, any questions before I move on to the last part of my presentation?
Yes, we have a couple of questions that had been dropped. So I'm just going to read them out while you do of the honors of answering them. So I have a question saying, okay, so I have a question, right? And I know that every MSME on this call also wants to get the answer. So you say payee is often ignored by micro employers. Why should even a business with just 2 or 3 staff care about deducting and remitting? So I may be a small business owner, and I don't see a reason why having 2 or 3 staff and I have to still care about deducting or remitting for those my few staff. So that's the question.
Okay, so some small businesses with only 2 or 3 employees actually ignore pay filing or pay remittances to the state authorities. They assume that it's not worth the hassle, and that's actually a risky mistake. Pay is a mandate or is mandated by the Personal Income Tax Act, and state boards enforce it aggressively because it's actually their main source of revenue. And employers are considered agents of states for pay. So meaning that when deductions are not made, these businesses are liable to tax assessments. So beyond the legal risks, employees increasingly need to provide proof of pay for things like visa application, government services. A small business that ignores pay risks losing good staff to even competitors who comply. And recall that we had earlier emphasized that it's now mandatory for individuals to file their tax returns come 1st of January 2026. So it means that where an employer does not file the pay returns of his employee, he is at risk of having that employee even lay a legal claim against the employer for not filing the returns because it's now mandatory. So even if you have just one staff that is taxable, that's a taxable person, that is not exempt from tax, it is advisable that you file your returns.
Okay, thank you so much, Temple. I guess that you've answered a lot of people that, like myself, that needs answer to that question. So we also have a couple of questions on that we've had people ask. So we see. So someone said, "Are we supposed to send copies of our invoices to NRS, or how will the e-invoice work?" I think Temple spoke about that, but you might want to just do a recap.
Okay, yeah, so I earlier clarified that, so I'll speak on it again. So the FRS is actually bringing on board an initiative such that they are able to tie to your business application, your accounting system, and are able to see all the transactions that happens on a daily basis. And that system is able to report to the FRS in real time or near real time transactions that happen in your business on a daily basis. So the whole technical connection and receiving that information is what the FRS would actually lay bare for small businesses. But for large corporates, which is already ongoing, there are dedicated technical vendors that have been assigned to that work with the FRS to transmit this information to the FRS. But like I said, the focus now is on large corporates, and post 1st November 2025, the focus will now be on small businesses, and the FRS will roll out a clear-cut guideline on how small businesses can onboard. But prior to that time, they have a dedicated web page that explains in detail what you need to know as a business, what the initiative is about, and how it affects small and large businesses.
Okay, thank you so much. Thank you so much. See, that question was very important. Zebulon told us about the rollout for November 1st, which we need to pay attention to as business owners, right? Because of time, let me just rush through some other questions. Then please keep your questions rolling in. We're going to answer every question today. I promise you that. Today we have Temple having giving us his attention, so we had the opportunity to do that. Make sure we drop our questions. This is why TBH is here for you, giving answers to your questions and helping you to give clarity to things you possibly would not have known if you're not in this session today. So the next question says that how we can get, okay. That person is asking, okay, this person is asking how we can get presentation. Don't worry, we are live streaming on YouTube, so you can always go back to our YouTube page to watch the full video once again at every time, at your convenience. You can always watch it again. So I'm going to ask the next question. It says that trying to say question we've not attended to. So it says, okay, so people has said this, and I don't know. So Benjamin says that with respect to VAT, is it every small business that is better to pay VAT? I am asking because I've been told that a business with revenue lower than 100 million are not required to pay VAT. Yeah, Temple has addressed that. Temple, do you want to say anything about that?
Okay, so I can re-emphasize that, and I know there are uncertainties around VAT, and that's why I dedicated a slide to that. So for that's very correct. The threshold for small businesses have increased, and this is in order for these ones to plow back their income to be able to scale up. So businesses in that category are not expected, are now exempt from VAT registration and filing. But of course, at the moment, prior to this pronouncement, there are businesses that have already crossed 50 million. It used to be 25 million, but it's now 100 million for small businesses. Their businesses have already crossed 50 million. And now that they are still within that threshold of small companies, do they need to stop filing VAT in its entirety? The option I actually provided on the call was to, if these ones want to continue deducting or charging VAT and continue to file, they should write formally to the FRS stating that they wish to opt out from the small business threshold and will still continue to charge VAT and render returns. But if this one wants to stop eventually and then see how they can watch their bandwidth and continue when they grow above small company threshold, then they should stop entirely and not continue to charge and not remit, because it's going to cause a huge tax infraction if the tax authorities eventually find out.
Yes, thank you so much. So I see that even the next question was still speaking to that, and I'm sure that with this explanation that Temple had given now, everybody that has questions on VAT can now have now gotten the clarity they seek, because Miracle said that, oh, I'd like to get clarity because you had mentioned in your first point in your slide. Okay, when teaching about VAT compliance, your first point said small businesses are exempted from VAT registration and filing, but in responding to Esther's question about dangers of having a mindset of tax exemption because we are small businesses, you mentioned that we still have to file VAT, PIT, and PAYE, etc. So Temple does mention that, and he has Billy said a lot around that. I'm very sure we have our clarity now. So also Miracle. And okay, so we have Deborah also mentioned. I didn't quite understand the part of adding or quoting my TIN in client invoices or receipts in order to be exempted from a certain tax on SMEs. Please, can you explain again? So you had mentioned, Temple, you had mentioned earlier that if you, as a small business, right, you could quote your TIN on your client invoices or receipt so that they're exempted from a certain tax. So Deborah is asking if you can further shed more light to what you are trying to tell us in that aspect. Thank you.
Okay, so I think she's actually referring to the conversation around withholding tax. So I did mention that the withholding tax regulation actually exempts small businesses with transaction value below 2 million from withholding tax, below 2 million naira from withholding tax deduction on their invoice. But this, for this business to enjoy this exemption, they must have a valid TIN. And the way you can state that you have a valid TIN is to quote it on your invoice when you submit same to your customers. Yeah. But where you don't have a valid TIN, you cannot, or you're not able to enjoy this exemption. This is based on the withholding tax regulation that took effect 1st January 2025. Esther, you're mute.
Oh, thank you so much, Temple. I didn't realize that. Okay, so I was saying that a couple of other questions I have, I think you had been able to answer them in the course of you explaining one or two, giving clarity to one or two other questions. So the site says I get withholding tax deducted on contract sums that are below even 10 million. Okay, I get withholding tax deducted on contract sums that are below even 10 million. It has accrued over time. Can I request to get it back since this business is still small and no tax liabilities yet on the business within the period? Should I go over the
Okay.
questions?
Yes, it's clear. Yeah. So what side can do? Okay, for emphasis, for you to enjoy this exemption, you must have transaction value below 2 million. That's what the law says. And I hear you say you have 10 million and above or above 10 million. So you are not able to
It
enjoy
says
the
below 10
exemption.
million. It says below 10 million.
Yes. The law says below 2 million. So if you are saying below 10 million, I want to believe it's already above 2 million, and you are not liable to that deduction. But what you can do, what the law also affords you, is to have an instant receipt. So you can approach your customers to avail you an instant receipt on the deductions applied on your transactions with them, and then you can use that and have an engagement with the tax authorities if a refund can be negotiated. Esther, you're mute again.
Okay, so I was saying that I would read out two more questions, then Temple would do us the honors of continuing with the presentation. So he says that, okay, this is an anonymous person. The person says, for pharmaceuticals, are suppliers obligated to remit taxes or are they permitted to have VAT deducted from their payments by clients? By their clients, I guess.
Okay, the question is not clear. You might want to go over it again.
Okay. For pharmaceutical companies, right? So the person is saying, are suppliers obligated to remit taxes or are they permitted to have VAT deducted from their payments by clients? So I think the person is trying to say that are they to pay taxes, or they are
So,
supplier, are they to pay taxes, or they are to take it from what their customers would pay them?
okay,
Yes.
so there are actually three things here. The first is for pharmaceutical. If it's a small company below 100 million, like the definition of small companies, you don't have an obligation to file or pay income tax. However, on a transaction basis, if you are doing a transaction of above 2 million, your bill will be subject to a withholding tax. But also the law also states clearly on VAT for certain transactions that are exempt. The law clearly spells them out, and this also includes basic food items and drugs. So if you fall under that space, then your VAT would your invoice would not actually be subject to would not include a VAT charge. So VAT and withholding tax should not be confused for um, um, a singular tax. There are two separate tax here. So VAT is actually borne by the customer, the one enjoying the service or enjoying the product. Withholding tax is borne by the vendor, the one actually providing the service or providing the products. Yes. So there are two distinct parts.
Thank you so much, Temple. I would just want to re-emphasize what Temple just said. So, withholding tax is what you as a vendor is supposed to pay, while the VAT is what your customers would be charged and would pay. So that's why you see on receipt, I guess we would always say VAT inclusive or VAT exclusive and all of those things, because we as the customers now are the ones paying those fees. But so the restaurant, we use a restaurant as a very typical example, a superstore or a supermarket, right? So the store owner would pay withholding tax, while the people buying from them would pay VAT. Temple, I hope I was able to try to
That's a
bring
beautiful
that
illustration.
up. Thank you. So I have another question from Ogundikbe. It says, when you said fixed asset below 250 million, what does that mean, and how do they quantify assets?
Yes, that's a good question. I was waiting for someone to ask that.
Yeah.
So for when the law says assets, fixed assets, when you carry on business, you have tools to use in ensuring that you provide the products, you provide the service to your final consumer. It could be even your laptop. It could be your generator. It could be the vehicle you use in transporting yourself for the purpose of that business. Maybe for let's say people in the space of um, courier service. They have their dispatch bikes that they use in transferring whatever package received from their customers from one point to the other. That bike in itself is an asset for the business. It can be valued in monetary terms. So the law is saying that for all the assets that you use in facilitating your business, if you quantify them, if you put value to them, if it's below 250 million naira and your annual revenue is also below 100 million naira, then you are a small company. But if you put your assets together and it's above 250 million naira and your revenue is above 100 million naira, then you've crossed the small company threshold. You are now a large corporate. So by assets, it means all the physical hardwares or software, as it were, that you use in facilitating your business, in generating revenue for your business. Esther.
Okay, thank you, Temple. So I will just allow you go to the next segment, and I see that it's a very interesting one. So it gets interesting by the hour as we are moving, right? So this is speaking to the action plan for the next 90 days. No MSME on this call should not pay attention. We all should pay attention because this is very important. So we have done the talking, the explanation, and simple as done us in us to want to tell us what's expected of us, how to not action all these things that we've said right now, which is a very important one you want to take out. After having the knowledge of, oh, what is the broad knowledge, you also have to know what's expected of you, what you should do. And I think that's what Temple will be telling us here. So I think it's very important. I know it is very important for us as MSMEs to pay attention to these things and know them and also ensure that we implement them. Remember, at TBH, we always want to ensure that whatever we're teaching you, whatever we're saying, whatever we are building capacity for our business customers, we want to ensure that it is impacting your business significantly and positively. Thank you, Temple. Please go ahead and do us the honors of taking us to the next segment. Thank you.
All right. So I've actually said a lot in the past hour, and it's time to summarize it into actionable points. I mean, it's a little above 90 days between today and the 1st of January when the Nigerian Tax Act will take effect, and a lot is required for small businesses to enjoy the exemptions we've actually pronounced and actually align their business to be tax compliant. So I'll be listing some actionable steps that is required of you as a small business to engage yourself with, and as you prepare for the commencement of the Nigerian Tax Act. So what should a small business owner do in the next 90 days? The first I would suggest and advise you is to review your turnover and confirm your correct tax band. So a lot has been said about small businesses and the threshold for small businesses. And it's very possible that some businesses on this call today have already crossed that threshold. So we need to go back to our records, review our annual turnover, review our assets. Remember, it's and not all. 100 million and below, and fixed asset of 250 million and below. So we want to review our record and ensure that we are still within the small business threshold and avoid any tax infraction that might come up should we have a visit from the tax regulators. The next and very important point is to ensure you have a valid tax identification number. It's very key for you to access reliefs and grants and to enjoy other exemptions that we've highlighted on the call today. So for businesses who already have a tax identification number, there's a difference between having one and ensuring that it's active. So it will be nice that within the next 90 days, for those that don't have a TIN, you ensure you register for one. And for those that already have and is not active, ensure that you activate sync so that you can be compliant. Next, I would also want us to review our VAT compliance status in relation to small companies and also resolve the issues around necessary notification to the FRS. So we talked about companies that are still small, but now the law have exempted them from VAT. But prior to this time, they were already charging VAT. Should they want to continue to charge, they need to do one and only thing: notify the FRS that they want to continue to charge. And when they charge, they ensure they remit and file. So for those that have not started charging, they can review their compliance status. As they continue to review their turnover to ensure they are still within the bandwidth of small companies, they should prepare, because someday they hope to scale up. So they should prepare to register for VAT and file SIM when they rise above the small business category. And then more importantly also is the need to start deducting and remitting pay for staff on your payroll. It is now mandatory for individuals to file their tax returns. And of course, this can only happen when you as an employer actually remit their taxes and file their returns. So we want to ensure that we put structures in place, put people in place, clean up our books, and ensure that we prepare for this rendition and fulfill the requirement of the law. And then lastly is the need to explore digital tools for record keeping and compliance. We talked about e-invoicing, and e-invoicing is strictly online. There's a need for businesses to ensure that they have good accounting system such that when the e-invoicing initiative comes to their door, they are able to onboard without any hassle. So digital tools should not be overlooked. It is a requirement now for you to join the moving train as it relates to tax. And then compliance as well. The laws, the penalties are now punitive. They are very high, and we do not want to fall into the bucket of not being compliant. So there's a need to constantly continue to review our records and ensure that we are up to date. So for emphasis again, the Business Hub is just by the doorstep to hold your hand, to guide you through these reforms in terms of being compliant and also being able to keep proper accounting records. And as we prepare for the next 90 days, come 1st January 2026, we will be able to coast when the new law takes effect. So thank you.
Thank you so much, Temple. Thank you for this very insightful session. We really appreciate all that we've learned today. Thank you, because I said it before, but I would like to say it again. That you have taken me from 0 to 100. In short, I think it's even point minus 0.5 to 100. Now I know how the tax reform impact my business. I know what I need to do. I know what is expected of me as an employer, and what is expected for me to do to my employees as well as my customers. What is expected for me around tax reform. So before closing the curtain, I would like to ask you a couple of questions that I know that would help myself as a business person and every other MSME on this call today. So let me tell you. So my first question would be that, so when you talk about digital compliance, right, which is now a very big push, e-invoicing, the tax portals, what steps can an SME take to avoid being left behind? Because yeah, it's 2025, it's a digital world, and every of these things that you have mentioned have been taken away from the traditional way, right? And now we now have the e-invoicing, we now have the tax portals and all that. What simple steps can I take as an MSME to ensure that I am not left behind? I don't want to be left behind I want to join the bus and fly.
Yeah, that's true. So it's now a digital space. The tax landscape is moving online. And then with the push for e-invoicing, electronic filing, digital portals, some of us might have heard of Tax Pro Max, which has been coming for going to 6 years now. That's introduction of online filing and technology at work in the tax space. So For small businesses, I would suggest and advise that no matter how basic it is, basic digital record keeping is a prerequisite. Well-structured spreadsheet is necessity to be able to keep track record of your transactions, your sales, and also your tax obligations. Because if SMEs don't adapt, they risk being locked out of contracts or even flagged during routine tax audits. So gone are the days where you have manual tax, manual record keeping, which will culminate into manual tax filing. But when you go digital, you are able to join the moving train, of course, be able to be tax compliant.
That's well noted. Thank you so much, Temple. So, my next question would now be that, as a tech specialist, an expert in this space, I would like to know what you have seen over the years that has been a typical there has been a typical mistake that MSMEs make when it comes to compliance. I know you must have had experience can never be taken away from you. And being the right man for this question, right, from your experience and less of experience and being a tax specialist, what would you say has been the single mistake, biggest mistake that MSMEs make when it comes to tax compliance?
That's a beautiful question. So for small businesses, the common pitfalls has always been treating tax as an occasional obligations. I can do it when I'm in the mood to do it, maybe when I have the money to pay, when I have the returns to file. Tax obligation is not an occasional obligation, it's a routine business process. And many small businesses only think about compliance when they have that tax regulator knocking at their door, and maybe when they have incomplete records, or perhaps they have huge tax liabilities piled up for them. That's when they pay attention to tax. But if you are prepared, you'll be able to avoid all of these before they even crystallize. A proactive approach to this would be monthly reconciliations and then timely filings of your returns and keeping records, systematic records of your transactions. All of this will save you money and then prevent you from falling into the space of unnecessary tax disputes. Yes, so this has actually been the issue with smaller businesses over time.
Yes, so Temple, if I would summarize what Temple said and to re-echo it to every one of us, Temple has said that tax should be something we take very important. It should be included in our operational month on month, day to day activities that we imbibe in our business. It should not be a case of, oh, when we want to do something, I remember that, oh, I'm supposed to be paying tax, so I've not paid my tax. That kind of behavior, we should stop that. If it has been a tradition that we are involved in, we should stop that and ensure that we take it very important, not just as a business owner, but as a patriotic citizen of the country, and also as a business person that wants to expand. You don't want to wait till you want to get things before you are being compliant. It should be something that people can see the trend in your business already. An investor wants to see that, oh, you are being compliant. That's when even investor or anyone giving you a finance will know that, okay, this person, I can trust my money with him because is this. Do you get? So it is even built, in my opinion, it builds credibility, sort of, right? So that, okay, and it not just credibility, it also builds structure. So people know that, oh, you have a structured business. It's not that you does every day when you does wake up maybe after 10 market days, like, oh, okay, like I've not paid my tax. So no, it shouldn't be like that. It should be something that is already in your structure. We need to pay our tax. This is what it is. This is what I need to do. It should be in our day-to-day activities. If it is monthly, our monthly activities, just like we do our payroll schedule, we should also ensure that our tax is also being being factored in whatever we are doing as business people that want to expand and stroke. So it's not about and Temple has oversaid it that it has not oversaid it, he has said it that you don't want to stay where you are, even if you're a small business today, you want to grow into a bigger corporate, right? And if you do not forget the art now, it will be a struggle when you become a bigger corporate, right? So it is very important that we start now and we are not caught wanting and in the act of not being compliant. Please, it's very important. And every time I do business advisory for anyone, I'm always telling them, are you compliant? What are you doing? Are you ensuring that everything is in place as a business? Yeah, right. So the last question I'm going to ask for you today, Temple, would be that if you were advising small businesses today, what would be the one compliance step they should commit in to the next 90 days? Just one compliant thing. Yes. So we're still speaking about being compliant. It's very important. Please do not undermine the importance of being compliant in your business. That's why I'm asking Temple this question. And I'm sure his answer is something we should also take note of and take it back and ensure we make use of it. Thank you, Temple.
Yeah, so I did list several actionable steps that we could take in the next 90 days. But one I would say should be priority and foremost is the registration and validation of tax identification number. So that's like the bedrock, that's the foundation of all your tax filings, your tax obligations, and the like. So you wouldn't want to be filing a return that is not tied to your business name because you don't have a number for your business. So it's low costs. The impact is high if we do not have one. So I suggest that every business today do not have a tax identification number or have a valid tax identification number should get on board and register for one today.
Thank you so much, Temple. Thank you so much for this very interesting session. But before we round up today, I would like to remind us that this exclusive and very insightful session was brought to you by the Business Hub in collaboration with Sterling, in collaboration with Alternative Bank to ensure that all our customers, right, in all aspects, understand tax and being compliant. And one of the good things to state here is that at the Business Hub, we help you stay compliant. We help you with your business formalization, with your business compliance. These are things that these are one of the services, one of the numerous services that we offer today. At the Business Hub as well, we help you to ensure that you get your TIN, your posting corporation services, how you can also ensure that you are in good standing and your books are well in good shape as well, right? These are things that we do at the Business Hub. If you are here to join the Business Hub, remember to type www.thebusinesshub.ng on any of your browser at all and join on board. Sign up today on the Business Hub to enjoy this sort of capacity building and more to come, over the months. We've also had very interesting ones. I'm very sure that people that have been following us back to back can testify to that. And if this is your first time joining any of the Business Hub webinars, it's very important that you note this and you join us and you join the trailblazers, the boss or the flight of people that want to expand their business, people that want to be equipped with knowledge. Knowledge is power. Never be underrated. It can never be overstated that knowledge, if you need to know things, you need to be involved in market trend at MSMEs. What are the things you need to do to stay compliant? What are the things you need to do to expand your business? What are the things you need to know as MSME? What are the things you need to do for your operational needs, for your day-to-day activities as a business person to stay sustainable in your business? These are things that we bring to you from the Business Hub, courtesy of the Business Hub. So join us today, www.thebusinesshub.ng. Also on the Business Hub, we are able to provide you with business finance to grow your business. I told you already that if you don't just do business advisory, we hold SME clinics, we provide business loans to you, we provide business. If you have a business account, ensure that as you're saying these things, you also have a business account so that all your proceeds, all your collections are made into a business account and not a savings account. It's very important that you separate your business from your personal finances. It's also very important, right? As a business advisor, I would always mention this to people. And tax filing, advisory services are things that we also help with at the business, or business tools as well. We help you with providing that on the business of. Remember to tell a friend to tell a friend to tell a friend today about the business of. We are happy to host you, Tebu. Thank you so much. We appreciate you. Thank you for the explicit session that you had with us. Thank you for breaking it down into tiniest bits. Thank you for making it very basic, and it wasn't a struggle to understand. So your presentation was top notch, and we appreciate you so well. And we are sure that when we're calling you again, you would always be delighted to be with us here on the TBH for such interesting session. Thank you to everyone that joined. Just stay tuned to us and get our. So yes, for everyone that has been asking about this session, please feel free to go on YouTube today to watch the live session. It was we were live on YouTube. You can still go back to see what we have. All you need to do is on the tip on YouTube, the business of no formatting of the words, the business of THE business and HUB as hub. Please ensure to join us on all our social media channels, on Instagram, on Facebook, on YouTube, on LinkedIn. We are out there, and ensure to also get onboarded on the business of platform to get exclusive invites to MSM events. Thank you once again, and this brings us to the end of this session. I'm happy to have you. I remain your host, Esther Tabatele from the business of. Bye for now, everyone. Bye.